Good morning, all subscribers, invited guests, traders across the globe, serious students of the market. This is Jeff Kilian for VTCtraders.com. That's Vector Tango Charlie Traders.com, otherwise known as the Vector Traders Consortium. For those of you who do not know us nor myself, we have been in the educational business for over 12 years now and teaching serious students of the market exactly how to do that. In the case that you are a new person, we're going to cover an awful lot of information this morning in order to be able to disseminate the proper trading intelligence that you're going to need in order to get in the business and to stay in the business for a long period of time. These are techniques, they are learned techniques and procedures and protocols that absolutely positively have to be followed to the T in order to be able to become and sustain profitability. One moment. I apologize for that. So before we get into this mountain of information this morning, I want to say that what I'm going to discuss today, what I'm going to reveal today, I have never laid down to the public in this in-depthness before. So I want all of you to pay strict attention to what I'm going to say, because we only have time to run through this once, and then we have to get into the real-time workspace, where if any real high probability trade setups come through and they look like they're going to follow through, I will take them in real time. So you're looking at a daily chart updated in real time of ES, which is the S&P 500 E-mini futures. It's an end of day chart updated in real time, and right now the prices are trading at 37.45.25 marked to the market. Now, since the price is tapped out here at the daily level, and I'll blow it up a little bit so everyone can see it, the open of yesterday's session was 35.93.25 and then traded up sharply. That happened because of strong institutional buying that came in that allowed the prices to trade up off of that level. The larger picture here is that we had a strong downside POC drawn from 2/1/2021. A lot of traders didn't even know that this level existed, but we had to go all the way back to here to see the larger contract sizing on an end-of-day basis that came in to create this floor level that acted as superior downside resistance it can support the trade off of, right? So this is the very reason now we know for sure that prices had stopped at this level, shook it out several times, and then traded to the upside based on the larger contract sizing that came in from the largest institutions. So no matter how far you have to go back, you're going to have to go back and find these levels, but they need to be associated with larger contract sizing like here, and then the next level would be approximately right here, which I have laid out at 35.16 if the market decides to trade down again, because from here to here, there's very little volume associated with these pivot point lows or base formation lows here on the way down, more or less a dry up. So this would be the next high probability long-term target to the downside in conclusion. So right now, according to what we're looking at, where the price is gapped away in the overnight session, we're trading above these two major daily levels that have no interruptions in yellow. The last level to get traded through was 37.32 flat. And now, again, the prices are trading at 37.45.75 with the possibilities of getting all the way up to 3777.50 on today's open equity session. Now, we have strong POCs to the upside that were created by the larger contract sizing that came in on the way down. So we're drilling up into a lot of resistance. However, I believe the decision has been made at this time for the higher probabilities of the market to continue to trade up, possibly as high as 3777.50 today. A POC, for those of you who are not aware of that, is a point of control where the largest amount of contracts are traded at a certain price and time, a certain intersection of price and time that made the market trade in a certain direction because of the intense volume behind it. So that's the short explanation behind what I'm looking at. Let's get into some of the indicators here and look at where we're at. First MFI for short-term money flow with a 14-period look back. Here we're off of the floor, up and looking to get through internal resistance as established by this peak right here. When the open equity session came in at 6 p.m. Eastern Standard Time, this value was lower and has crept up as the prices have continued to trade up. So that's positive for the long, being off of the new floor that we just laid out on the end of day chart levels with the volume in the subgraph below. Getting into CMF here, longer term money flow tracker, double bottom, up, now slightly up for the session, and a ceiling here as well established by this peak. So we're pretty much at the infancy of a positive divergence where we have a double bottom here, but the prices themselves were way down. So the indicator was saying that the prices are shaking out here while the indicator is still leveled out with the strength remaining the same between this through and this through here, and now trading off of that positive for the long, again, possibility today. Chaikin oscillator, third here coming in. We're already through the ceiling here and moving up off of a well-established short-term positive divergence here as compared to the prices. For those of you who are not aware of divergence analysis, this is what indicates, in this case, pent-up buying pressure that has not yet taken place in the form of future directional price movement. That's the very simple answer at this point. Where are we at? 9:15. Okay, we got about 5 minutes left before we get into the real-time workspace. So the strength of the divergence or divergences or multiple divergences in multiple time frames dictates the higher probability, percentage probability of the market actually turning around or trade in real time, moving in the anticipated direction. So higher price, lower price, lower through indicator formation as compared to a higher through, and now through the ceiling itself, confirming that prices should continue to move up. Here, let's take a look at this. This is what really came into play for me. The smart money, largest 15-minute volume in the past 365 days. You can load up a 15-minute chart yourself with the volume in the subgraph below with the prices on top and go back one whole year. And you will never see any volume that's come in that will match that number. I know where it came from. I know where there was a match further back. But for the sake of example, this is event volume. This is series smart money. They put the brakes on after the floor level that was drawn on the end of day chart updated in real time with the levels. I showed you superior POC level. This is what kind of volume it takes in order to turn the market back around. Breaks and accumulation, additional accumulation, and this near market close. So that being said, we're looking at the macro picture first, and then we're drilling down into the micro picture first. But we need to always have a clear consensus, in this case, SMI, 321 period configuration, right? On a positive divergence again, as compared to the down sloping prices, and now we're crossing below to above. So getting into price-based indicators, this is the fastest one we have within my actual ES workspace, confirming that price-based indicator-wise, the first one we're looking at is that we are clear to go long after a positive divergence. MACD coming in last, excuse me, right here. The through is established. The disparity between the MACD and the signal line is tightening, weakening between the two. So there we have it. So let's take a look at what our smart money bias market trading call should be for the session based on everything we have discussed so far. We are net neutral with a long bias, and if we get enough volume to come in real time, right, say possibly through this 50 level established between this area here, these two closes, right, between here and here, which has already been probed, then we can be long level 6 again and trade more contracts above that level, which has already been tested. That's it. So according to the strength of your smart money bias market trading call, whether you're net neutral, you can go long or short based off of superior resistance to the downside, or long off of superior support where you may have POCs. On any given day, the contract sizing should change because of that bias. And this is what a true professional looks at and knows he or she needs to do in order to sustain profitability and be on top of the risk mitigation, which is the key to longevity, as any professional knows. This is my 1 minute chart within my real-time workspace. And let's get this back up here so I can see you. Can everybody see this workspace okay? Or excuse me, this chart. Can I get a raise of hands? Okay, good. Excellent. Okay, so now all the daily levels that you saw previously on my end of day workspace are now laid out here, plus the incrementals connected to the highs, the lows, and the bars that have been interrupted in order to be able to know exactly where we have any free and clear levels so we can make the most amount of money. We're looking for trades that have a 3-to-1 reward to risk ratio. If we're going to risk $1, we need to be able to make 3. You could scalp if you want to, right? And take it off a little quicker. But it's not necessary if the correct trade setup comes along, the VTC model trade setup, and the institutional volume comes in at the preferred entry prices in order to be able to get that trade to follow through. So this is what I took and extrapolated over onto this 1 minute chart that you're looking at right now. So now, because I'm net neutral, and I could be trading long or short depending upon my real-time trade setup, it is 9:20. I laid out some preferred entries that have that kind of distance that we're looking for, from here to here, right? So the preferred entry price is not right above the 1 minute level here. It's above the highs that are located here. So we can get these taken out, called cleared out, so we don't get shaken out, because the market's going to trade through. We should be able to get 3 or 4 ticks above these highs. Now remember, traders, the volume that's coming here is fairly high, but when the open equity session kicks in, it should dwarf most anything that's here, unless it's connected to a major POC like this, even with lighter volume, that would have to be traded through, plus the low of the down close from 922 at 37.63 in order to go in long here. So the preferred entry is here with a price profit target at the session high. In between the session high and the low of the down close, we have an NTZ, no trade zone. And then we're in again above 37.64.25 and ride it up to the close of the down close of 922 for leg 1, and possibly all the way up to the open of the close of 923. Now, where we have considerable distance between the yen at 64.25, right, and 72, I'm going to fly in a 50 here. The divided difference between the two, right there, paint it red so we know it's a 50, because we may want to see how the market reacts at that point in real time. So possibly leg 1, possibly leg 2, possibly leg 3, right there. There is some serious money there to the upside today if the market's going to go that way. Right now, my custom level 2 indicator is above where the prices are currently trading, right? A standout order, a good one too. So that's a good sign. 303, 302 contracts above the market right now. There it is. Can't hide that. You'd want to see that kind of action coming in when you get to your preferred entries here or here. Okay, 15-minute charts right now. I'm using an MFI and a CMF. Which time do we have? Yeah, we have time. So in my real-time workspace and all my experience, the 15-minute charts are the mother of all time frames to begin the macro view when you're in your real-time environment. And right now, we are clear in infancy to go long. There's plenty of room to go with the indicator formations to get to overbought or oversold zones. If we shave it down there and there, The SMI is to the downside with plenty of room to go until you get to your overbought territory. We need one of these to be net neutral and the other one to be up, or one to be net neutral and the other to be down at a bare minimum to trade long or short. The preferred animal is off of negative divergences, right? Like this right here. We are short for time, but let's fly it in. Okay. This is connected to my prices. Lower price, higher price. Don't hold me hostage. I have to rough this in here. F2, and there we are. And we have the same thing here. So here we have multiple negative divergences for multiple indicators within different configurations of look-back periods. Short-term smart money tracker, MFI. Long-term smart money tracker right here of all the institutional players. And what has happened since that took place? Obviously, the price has traded down some right over here. So that would be a good scalp move. Easy to see. Here's your floor right there, and then trading down, and the prices are trading down still on a 15-minute basis. Once we have that cleared out and we understand that we have the pent-up selling pressure in our favor, I have to be very careful here to move these charts around correctly so we don't lose anything. Okay. Then we're going to move into the 5-minute time frame, and we're going to be looking at the MFI, CMF, SMI, and the MACD. Now, these are showing us a different picture right now. The fives themselves are right here. Good region between here and here, overbought, oversold, and now we're down on the CMF. So in this case, on the fives, we need both to be in parallel, moving in the same direction at the same time, hopefully off of negative or positive divergences, in order to act on those signals that the indicators are giving us. To the downside, my first preferred entry is going to be below the low of the down close of 721. That entry price is 341 flat. That's 741.75 minus 3. In this case, it's minus 3. We're on top. We were plus 3 or 4. My target to the downside is the first 1-minute level. No real volume associated with that to manage the trade to the 1-minute level. And then see how the additional volume comes in to trade down to the high of the down close, 929. And then possibly all the way down to the close of the up close. The close of the up close is a superior price profit downside target because it is a close of an up close on a daily basis. And now we have to get ready and prepare ourselves to trade. I'm only going to take a trade if everything lines up. And if it doesn't, we're not going to do anything. And the reason is you don't have to chase the market. You have to let the trades come to you. You don't have to prove anything to the market whatsoever. It has to prove to you that it's worth your emotional and monetary capital. Okay, let's see what we got here. We'll take this. One moment, please. Stop sharing for just a second. Okay, almost there. Okay, let's share again. Okay, can everybody see my 1-minute chart again? Can I get hands up, please? Hands up. Yeah, okay, good. Excellent. This is an enormous amount of information to go through. But this is how thorough it has to be, traders. It's almost as if it's a military operation, right? Redundancy, redundancy, redundancy. If one thing happens, then we do this. And if that happens, we do this. And then if that happens, we do this. And the worst case scenario is, we already know what it is. And in this case, it's a trade that won't follow through, or if it does get through a preferred entry and does not follow through, the key is that there is enough time, there should be sufficient time to react and get out of that trade before you have a chance to lose any serious money, right? Exactly. So let's get prepared here. Okay. Now I have a very, very accurate order flow indicator that I'm using here that you can get from Mike's Trading Room. It's called the GOM and the GOM Delta, which shows me exactly how much institutional buying or selling is coming in and what the strength of that is. This is the only time I'll be able to show this, because if I'm trading, I'll need to see it. This is 50 ticks. Every 50 trades that came through are identified by a single bar. Right now, the GOM is up at near highest level since the overnight session open, F6, not 5. Fly this in and look for the market to trade through that based on all this institutional buying and selling that's going on behind the prices. Here's a GOM Delta volume, dark numbers in here. Accumulation or distribution remains to be seen. More accumulation coming in now. I will not trade without this indicator. Yesterday we had an incredibly profitable day. I had Tom Scalero in the room, and it was just one after the other. So here we are. We have market opening. Now this trade at market opening is probably one of the most difficult to do because we are right at market opening. So you might look to see how these levels get shaken out or not. Right now they've already shaken out the high of the up close. A lot of traders are long right there, but that trade has not followed through yet. We have no confirmation at this point to take that trade. We need more confirmations. The 5s are mixed, meaning the MFI and the CMF are giving opposite signals, and the 15s are coming to you. The 15s are still mixed, down and one down and one up. So there's no confirmation here to take the long at this point, nor here. So they've run the stops at 37.51.25 and the 1 minute level here at 37.54.75. If these prices are going to trade up and trade through, they will get through the preferred entry and up to the session high if enough contract sizing comes in. How are we going to identify with that? With the fastest indicator we have, 5-second BTC VMA. The largest amount of contracts traded so far is on the upside. We got about 2,200 on the up, over 1,500 on the down. That kind of action with these back-coded orders, these are the largest institutions doing this because of the speed with which they're coming in, because they get filled first. It's either going to be a shakeout or this is the direction that the market's going to move in. The GOM is now through the existing ceiling and way up higher into another one. Okay, so that's positive for the long. The setup is starting to come our way, right? 5s are in better shape to be long. 15s are now clear to be long. So the trade is coming to us. Let's let it come to us and see how these prices react here. We're going to get shaken out again, or are we going to follow through? Look for more volume to come in here. GOM is up again, right? And again, GOM up and again. There you are. Your preferred entry's been hit. Prices are trading up. Now remember, if this trade doesn't follow through, there's plenty of time to turn back around and get out. There's no problem with that. GOM is up again. Your job as a professional is to get out at a predetermined price profit target. In this case, would be the high. Fifteens 5 still clear to be long. 60-second VMA clear to stay long. 5 seconds. Here we go. See this? 1,000 right there. 1,000. I'm already out of my own account. Right? Done. Here we have it. And the probe is already set through here. So that was a profitable trade identified by this methodology and taken by myself. I will not show my account numbers over the internet. So every trade that I take, I get out at first, and then I get out where I'm simming to show you that I got out as soon as I can. My real numbers are about $1,200 from here to here, and that was trading 5 contracts. Okay, so now, second leg here, let's look to get in here and ride it up to the 50 and see how prices react to that point, and then 3772 flat for the close of the down close. Now remember, traders, this is a close of a down close, so that's superior upside resistance. And if it's not there, because it's from 922, and it's a pretty fresh state, for sure, the open of the down close at 923. But all bets are off until we get above here with substantial new volume. You can see the profit taking that came in on the GOM while we have the moment, the sells that came in after the negative divergence, right? Here's the buys that drove our prices up to our price profit target, and then the sells that came in to take and pull those orders off by the smart money, the profit from the difference. And I can guarantee you those guys weren't trading 5, 7, 9, or 11 contracts. They're trading thousands of contracts. Look at how many contracts are traded in right here, right? The last 1 minute bar where price is tapped out. Total volume is 14,194 contracts. That is a lot of contracts. Incredible. Now the GOM is down as compared to where the prices are. So the GOM itself is on a negative divergence here. From here to here, a primary and a secondary here. So this is really what's going on behind the prices. So the prices are trading up, but not on the same strength as they did here. So we're going to need that accumulation to come in, and it's just starting to come in now to get through this ceiling in order to have confidence to trade long again. Good. Level 2 is stacked above the market. Standout order is 290 over 3, 204, right? As soon as that limit order gets hit, it will get activated, and then hopefully market orders will come in, and that trade will follow through to the next existing price profit target. F5, F6, let's get it in here. My new ceiling on my GOM. We're almost there. A lot of information here. And by the way, this is exactly what my clients, serious students of the market, go through on a daily basis. On a daily basis, working with me in this trading room to put the pieces of the puzzle together after they finish their executive mentorship programs. Fives are mixed, no signal to go long. The 15s are still long. So we need an uptick or net neutral. No, we need a definite uptick out of CMF. The SMI and the MACD on the 5s is great shape. Standout order at level 2 above the market, still 304, 305 contracts. Now at this point, we're going to be looking for substantial volume to come in here. Excuse me. Hopefully something like this again on a 5-second time frame, which shows all the orders that have been hit within a 5-second increment. However, the 5-second VMA is way down as compared to what the prices are. So we have another negative divergence here in this indicator as compared to what the prices are doing. And this is the fastest indicator we have within our arsenal. And where's the positive volume coming through here, like this or like this, in order to guarantee the trade's going to follow through? None. So what are the probabilities of this trade following through as we speak? No. No. Not yet. Not yet. So they shook out this level at 3763.50, right? Right here. More than a number of times. Now you have a lot of guys going short right here. Off of this, looking to get back down to the preferred entry or the 50 right here, but that's a scalp. Okay, the 15s are still long. The 5s are mixed. One's long and one's short. You have some accumulation that came in on the GOM here, right? And so The GOM is now back down through its own internal floor, but now trading back up somewhat. So the likelihood of this move trading quickly to the downside as the move we identified with and profited from is not on the same percentage level whatsoever. Question. Please lower your hands. And those that understand the basics behind what I'm talking about, please raise yours again. I mean, this is information at the highest level. Only really strong, highly trained retail traders can get this information if they're fortunate enough to search so many years, or institutional traders that have been fortunate enough to get into the right institution. Okay, here we have the preferred entry hit, GOM's up. Ready? Let's see if this one follows through, right? Or not, and if not, there's plenty of time again to get out of the trade before things turn back around. There's your back-coded orders coming in. Here I am right here, see, 500 for 5 contracts, right, at the 50. 5 seconds still up. We're looking to get out either at the 50 on a retracement to lock this money in, or we're looking to get out to close the down close. 1,000. If I see any weakness whatsoever, I'm going to get out of this trade based on a failed try to get 2, and I'm done. That's it. Over 1,000. The weakness that came in was a small downtick out of the CMF on the 5s. Okay, that's it. So I got in the right time, maybe a tick late, and I got out when I saw any weakness come in whatsoever. Those of you who have, the profile to hold on to a trade, to take the longer term move, in this case in real time, would still be in this trade because you haven't traded below the 50. But at this point, with the 5-second down, right, and the GOM was down as well here, anything could happen on a flash sell to drive these prices back down quick. And everything that you just made, you would have given back almost all of it. And think about that. What would that do to your emotional capital when the next move came along? It erodes it. So far, with this very strict VTC model trading methodology, incorporating the end-of-day analysis into real-time analysis, we have essentially extracted out of the market anything that was worth having today and avoided a series, 1, 2, 3, 4, 5, 6 bad trades that we identified where the smart money was basically running the stops. As my most recent client, Thomas Scalero, says, fascinating. So while we have a minute, I'll tell you a little story about myself. I started studying about 30 years ago, and then started trading about 25 years ago, stocks, sector rotation, all that. And then when the futures market had evolved a little more, and I was tired of getting, hit every 3-4 weeks, where the market may have gapped down and I was long and given back 25-30% of what I made on positions I was holding for 3, 5, 7 days, right? I decided to, and I said, I'm just going to go in and trade futures. That's it, because I have no overnight risk. So here's the beauty of learning how to do this the correct way. You're in, you're out, and then you're done. You can sleep good, preserve your emotional monetary capital, and then be fresh, ready, clean for the next session. I can't tell you how valuable that is. The second thing that I want to get across here while we're on this important subject matter of how to find, track, and trade the smart money is that if you're not a high volume trader, like you just saw me pull off, if you're not tracking these people, if you're not fading their moves as fast as humanly possible at your preferred entry prices, right, to avoid the shakeouts, your results are never going to be the same. Following price-based indicators, a little bit of this, a little bit of that, you'll be lucky to be profitable. You absolutely positively have to find when and where these people are trading in a big way, their footprints revealed. And then when everything is lined up, strike. and take it off when you get to a predetermined price profit target like we had discussed here. Now, those of you who would want to be long again, if the market's going to give it to you, because the third leg is getting further and further away from, where the catalyst of the move began, the larger contract sizing came in. So the further away you get, the lower the probabilities are that the move could follow through, unless the market is opened up in a big way, long, like level 7, level 8, as we put a stamp on it, right? Our people do. So in conclusion, the best thing that could happen is price tap out here or here for sure. We get negative divergences on the indicators and we turn right back around and we go short, but only at a serious upside price profit target, like maybe the open of the down close. Because right now these prices are going nowhere. So we got out at exactly the right time before we had a chance to give any money back, and now we wait. And this is the way it works, because your greatest positional advantage as a fund manager, as a futures managed trader, as a strong independent within an institution who's given a certain amount of money, is to wait. Discipline, waiting for the trade to come to you. You really have no other choice. If you push it, you're going to get stopped out. If you can have the discipline, turn to patience to wait, all this can be yours, because the system works. The only variable in this whole thing is you. This is extremely strict methodology that has to be adhered to, because if you push it and you change it, the results are not going to be what I just pulled off, and you're not going to like them. And you do that a couple of times. My question is, what's going to happen to you when the next high probability trade setup comes and follows through, right? Where's your mind going to be at? You're going to be scared. You're going to be reluctant. You're not going to have the same confidence level, right, that you had before, because you didn't do the right thing. Okay, so here we are long, right, and looking to get out here or possibly up here. Again, the levels identified ahead of time, free and clear levels that are laid out by the smart money from the past, extrapolated over into the future. Learning how to select these levels correctly requires some serious training, but everybody on our end, they know how to do this now and lock in a profit and get out, in, out again. And then obviously higher than that would be the higher the down close, and that's as high as I have gone today. But I think that this could be it for the moment, because after that, you have a lot of sells that came in on the GOM right here. See the GOM delta volume, smart money, combined with dark numbers here, here, here for the sell. And that's why they got out right there to get in and get out and lock in that profit. Okay, so it's 9:47. Before we get into a few questions and answers, let's get over here. Everybody should have a mini control panel that has a chat area in it. And I'd like to get a few links in there. And managing all this it takes a lot, but as you can see, it is possible. And then programs, okay. Okay, here we go. And then we have one for institutional. Here we go. That should cover it. For those of you who are serious students of the market, who are dedicated, who know that there's a sea of money to be made out there, who are willing to make a commitment to yourself and to your training, we have it. I just sent out 3 links. There is a link to the trading course. Get your feet wet. There are 2 links, one for the established retail trader, and there's one for institutional traders. So if that is your interest, again, serious interest, and you're looking to get this taken care of once and for all, we do have the information. We're willing to disseminate it under a strict contract with you, not to disseminate any of this information to anyone else whatsoever. And we go. So here we are again, price is moving up, high to down close. So in essence, our call for the session and getting through, the preferred entry at the low of the down close here after the up run, right? And going into long level 6, right? Possibly long level 7 here, trademark contracts, but here would be the key for me. And then, riding that up. Remember, people, the most important thing as far as risk mitigation goes is following the rules and duplicating that process every single trade, every single day, so that nothing gets left to chance. This is the way it has to be. I'm sorry, it's that strict. Risk mitigation is the key to longevity in trading. It's not the home run trades. The series of trades like today, there's going to be days when the market doesn't give you anything or gives you just a little bit. But knowing how to get into these trades at the right time based on identifying with the smart money and getting out before you have a chance to lose money is exactly what you need to know in order to stay in this business, because that's what it is. It is a business. Questions in the chat area. What do we have, people? We have time for a few. I have a question from, one second, let's get that back. Okay, I have a question from Bill. We'll leave his last name out of it. Bill says, can we trade other markets with this methodology? The answer is absolutely positively yes. I use ES as the proxy today because most traders, new, intermediate, or advanced, are familiar with this market because of its exposure, right? Personally, I like to trade YM because I'm looking at ES first, and then I go into my primary YM because now I have gone through the analysis of the big brothers compared to the little brother, and I can get a little more bang for my buck on YM. I mean, ES is $12.50 a quarter point. Every full point is $50. YM is $5 quarter point, $20 every full point. You may have to beef up the contract some, to get more leverage out of your money. And, ES, YM, and when the market goes flat and there's nothing going on, because we're net neutral and the market is really tight, low liquidity, go right into NQ. So you have the Dow E-mini futures, and you also have the NASDAQ E-mini futures, which is a great market. I've made a lot of money from that market when the general markets have tightened up because it's technology-based and the volatility is greater. So the long question, the long answer to the short question. Be traded on, I have Thinkorswim. No. These indicators are specific to NinjaTrader 7 and soon to be 8. We're just trying to figure out how to finish up one of them. I've hired 2 code writers and nobody can seem to figure it out yet. So I have to hire another one, hopefully tomorrow, and get that finished up, and they'll all be available with the NinjaTrader 8. Honorable mention here, the 15s are losing momentum, the 5s are mixed to go short, and now we're through this level. So you're gonna have a lot of people going short here, thinking that this is as far as the market's gonna go today. Now the market has dried up on this volume here, right? See it? As compared to where the price is tapped out. So where the volume is lower, there's a greater possibility of going short below here and having that follow through. We don't have everything we need yet. So this would be a higher risk trade, although getting close to a high probability trade, right? Would follow through. See the sells that came in from the GOM? You're through the floor here, through the floor here. Look at that institutional selling. Intense. So these are the kind of things you need to look at, because you have to switch your mindset immediately and say, okay, that's it. That's as far as the market could be going, right? And although it's a higher risk trade, maybe I'm going to take it now because I have a couple years of experience with this methodology. And if the additional volume comes through, I'm going to take it under the pretense that the additional volume will come through and I'll get a good short out of this. But if it doesn't, I have to take ownership of my decision and have to get out of this trade as fast as I possibly can if it doesn't continue to go in my anticipated direction. And right now, the 15s are mixed and the 5s are mixed. Now 5s are clear. See? So it's not just the preferred entry. It is everything that we need at the preferred entry price in order to take that trade at exactly that moment, and we didn't have it. Question. Okay. All good. Yes. Brano's got it. Okay. We have a question from a fellow named Mike, and he says, would I rather trade short or long? My answer is, without a doubt, short. Because I know that on balance, I can make more money shorting than I can ever make trading long because of the fear factor, because of getting to price profit targets and prices selling off intensely, especially when I'm on the downside of market net neutral within our smart money bias market trading call, or I'm short level 7 or 8. It's a no-brainer. Just go get the money and come out. So this is what we're covering today. And I hope you appreciate everything I've run through today. I really hope you do, because I have never, ever given up this much trading intelligence to the public. Close, but never this much, never. And my goal is that all of you have learned something today that you can take and use into your trading immediately to become a better trader, because this is what I want. I'm good. My life is good. My karma is good. I'm set in every way. So this is what I want. And if you have a dream, if you're looking for a business where you don't have to answer to anybody, you can come and go as you please. You know, you're of an independent character. This is a real good choice to get your feet wet with, you know, course material, whatever, go as far as you want to go, and see if it's a match, if it fits your profile. Because I discovered this 30 years ago. What I went through, I wouldn't wish on anybody. Nobody. And I was up against it hard. But I knew that when I was done, I was going to make as much as I needed to make, live wherever I wanted to live, and not have to answer to anybody. And now I live in the Dominican Republic, and I have several locations here, and I'm living the life that I want. I work really hard, and I have a beautiful son that I tend to daily. So, but this, long story short, this profession has given me more than I had ever anticipated. Thank you all, traders across the globe. We should have this posted, if not today, tomorrow on our YouTube channel, and everybody will get a chance to see it there. It's been my pleasure to present to all of you, and I really do wish you the best in trading today and throughout the rest of the week. We'll see you on the next presentation.